Here's what fueled Bitcoin's weekend rally and what to watch for next. Hey guys, it's Keith Allen, and man, busy weekend for sure. And we've got some changes in the order book, some big time changes in the order book. So we're going to look at that. We're going to look at the fundamentals that got things going and what it's going to take to keep things continuing on this trajectory, or are we going to see a retrace? Let's fade out of this and get into the charts and the data and see if we can make some decisions here. So, it really all kind of started at the last week as we went into the monthly close. Obviously, we saw a pretty serious correction, about 23%. And that was really largely based on speculation that the Fed was going to be hawkish. And of course, Fed Chair Powell came out on Wednesday afternoon and kind of set the market at ease, stating that, even though they had made some progress on inflation, that they thought that progress had stalled. So obviously there were no cuts and no hikes at that point, but questions were asked on whether or not he thought that the next move would be a hike. He said he did not foresee hikes in the future. And there was some discussion about stagnation. He said he saw nothing that indicated stagflation at that point, although we've maybe seen some data points that may start to allude to that since then, but that's another topic. And then on Thursday, we had jobless reports came out, and those were pretty much a nothing burger. And then on Friday, the non-farm payrolls and unemployment reports came out, and those were just huge misses. So let's take a look. Let me share the screen here, and we can go take a look at some of these charts and see if we can make sense of it all. And interestingly, there's a glimpse at fire charts. We'll get to get back to that here shortly. But first, last week's metrics came out, and I don't quite understand. There's been some debate about this. How can the weekly jobless claims numbers not coincide anywhere relative to the unemployment numbers? I don't quite understand that. Are the numbers being skewed a little bit? Is there something going on there that we don't know about? Are there going to be corrections and revisions coming in later? That all remains to be seen. But nonetheless, the market is reacting to the data that's there. And the data on jobless claims was not a big deal here, right? Actually, slight improvement over the previous week. But when we got to Friday, we saw the non-farm payrolls. Previous report was at 315,000. They were down to 175,000. That's a huge, huge change. And the consensus obviously was also a miss. The consensus was at 243,000. Still a very, very big miss here, meaning less people were getting paid, right? Unemployment rate went up a tick. 0.1%. That's significant. May not seem like a lot to you, but that is significant. If this thing crosses over 4%, then we're probably really going to see the Fed maybe accelerate the schedule that they start to cut. I'm no economist. Take that with a grain of salt. But this is obviously significant because we're seeing unemployment go up, which is something that the Fed watches very, very closely. Additionally, participation rate kind of flat here. Hourly earnings down a bit. Government payrolls down big time. Non-farm payrolls, private also significant miss here, right? So, and unemployment rate on the U6 unemployment rate up a tenth as well. So these issues here kind of pointed to the fact that, the market realized, Powell had said on Wednesday that progress had stalled, and this is really breaking the stall, right? This is again showing signs of progress from the Fed policy tightening that have gotten us here to this point. So we can move on from there. So what happened? Actually, it's really cool and very interesting to see. We could see it in a couple of different places. I showed you guys. I actually posted this on Twitter the other day. That the moment, we literally saw the moment that those unemployment numbers came out, and that's when this pump started here, right? And I posted this illustration over the week to help you guys understand how to read these heat maps, fire charts heat maps. It's liquidity in the order book and the bin CVD here, and so this kind of shows you when we're in these, I often say that liquidity dampens volatility. And when we have thin liquidity, that amplifies the volatility. So this liquidity got cleared out on the way down, and you can see some stair stepping downward to help push it that way. I call this liquidity herding, when they start just moving blocks of liquidity to push price direction, and that served its purpose. And then we started to see things moving up. U.S. unemployment report came out, and then that was good news. Boom, price went up. This was plunge protection in place before the unemployment report, and things started to move up from there. Uh, and then, a concern here. In fact, Cointelegraph picked up an article on this that I had said, be cautious of this area of thin liquidity here, because it could come back, to bite us. We could see a retrace very easily. It could fall through if we didn't see some new liquidity coming into the in place to replenish here. And what did we see? Well, we saw liquidity moving, right? This was kind of how the whole move played out, right? It started like this. A big block got dropped down from the 69K level down to 64, holding price down. Price started to move up towards it to fill. Another block got added to that, adding strength, push it back down. And look, bulls answered by placing a block of their own and then moving bids from this 61K level up here into the range, laddering up towards 64K. So now let's move to what's real and happening now. You can see this game continues here, right? The liquidity game continues to move around the order book here. And resistance very strong up in this 65 to 66K level. And you can see it building here. They're trying to push price down and get filled down here. And I got to wonder if, all this activity that we've seen over the weekend, remember the ETFs are locked out on the weekends. Oh, that brings me to one more huge catalyst that got things going over the weekend, right? So we talked about what was happening with the unemployment numbers coming in on Friday, right? And let's see, let's go to the weekly. We can see it on the weekly chart, I think. If I refresh this and load the weekly chart, we can see it on the weekly chart. Okay, there we go. So this was that move, right? Okay, yeah. So this was that move right when the unemployment numbers came out, and we saw all this happening. But later that evening, okay, after the ETFs had closed and settled, we got a report that Grayscale had actually had their first day of inflows right here. And that is super, super significant. It hasn't happened yet, right? I've been talking about this trend of these massive outflows starting to fade a bit, and felt like it was starting to trend downward, and now, or upward, I guess, however you look at it. But nonetheless, yesterday or Friday was their first day of net inflow. So now we have to see if this continues, right? Is this going to continue today? Did these guys get lured in? And in fact, it was across the board on Friday that all the ETF entities, even the ones that were paused prior, and even the ones that they all sold on that monthly close. Did they get caught? Did they sell the bottom? Did they sell the bottom? And now are they buying the pump? So that's what we need to see develop here. Over the next, over the course of this week, right? Are they going to continue to buy because they think that they've got a bottom signal, or are they going to let things ebb and flow as the market likes to do? So let's go back to the charts now, and you can see, what's taking place here. Look at this block. It's kind of a ladder into place here, and I just have to wonder if these guys got lured in, right? They're locked out all weekend, and again, I keep talking about the difference between owning a Bitcoin ETF and owning actual Bitcoin. If you are, and really, it depends on what suits you as a trader and investor, right? If you are a TradFi investor and you're not comfortable with the risk or all of the minutia and details and hoops you got to jump through to buy Bitcoin until you first establish your account, and you don't want to deal with the volatility, then sure, ETF might be right for you. But if you're a trader and you want to take advantage of the swings and the volatility that happens, then owning real Bitcoin is probably the better scenario, and that doesn't even talk about the whole hedge against inflation or fiat. Obviously those narratives exist in their own right, but I'm just talking from a trading and investing perspective. To me, the real moves happen with actual Bitcoin, and you just in a market that operates 24/7, it is difficult to trade it in within the confines of TradFi hours. Now they're floating ideas here in the U.S. of potentially opening the stock market up 24/7 trading, and I think it's a horrible idea, to be honest with you. I really do, and I hope it doesn't happen. I'll be honest, I actually don't love the 24/7 aspect of trading Bitcoin. I'd love to have nights and weekends off and not have to go, oh shit, I got to go check something, or I got to go change orders because of this volatility. So it is what it is, and we trade what's in front of us, and we deal with the hand that we're dealt, and so that's where we are now. In any case, we're seeing some bid support come in here to really kind of battle this line between 65 and 66K. If we zoom out across time frames here a little bit, and I always like to do this to show really what the dynamic is in terms of the whole order book. And you see there's thin areas. We have some decent blocks of liquidity on both sides, but not the real not the real super bright blocks of heavy liquidity of 100 million or more, right? So that's not there yet. If we zoom in, we can see some moments where things look pretty good, and it was towards the end of the month, but this is all now faded, right? You see how price moved away from this, and now it's gone. So is this going to be enough to hold us here? You can see the strength above. The resistance is stronger than the support at this moment. So this is where the battle is. And then if we clear this, then we can talk about getting back to the 69K level. And I think that is really the critical thing to be conscious of. What's the critical support and what's the critical resistance level that are going to really dictate whether we have a breakout or a breakdown. And for that, let's go over to the candle chart and see how these things all correlate, right? So if you have been following along for a little while, you know that I had built this cup and handle, felt like it was developing here as we went towards the prior all-time high, the 2021 top at 69K. And that cup had developed, and now it was a matter of, are we going to develop a handle? And you can see here that we do have a bit of a handle developing here, right? As price has zigged and zagged. I'll take out all the minutia and just kind of like, here's where we're at right now and what's going to happen next. So yeah, this is good to see. Obviously, it would validate the pattern here. And this 21-week moving average, really, really important that holds. Okay. Now, a retest of that level would give us some validity to the fact that that's going to be real support and that it will hold. But at the moment, it looks like the move. Things aren't always as they seem. So I want to break into this a little bit more, and I'm going to clear this out of the way so it's not in our way when we go into the lower time frames. But let's look at what has happened historically at this level, right? And how even wicks can tell us something. Okay, so this 69K level, I think, is super, super important. We've yet to validate an RS flip there, resistance support flip. And that needs to happen for us to be able to go back after this all-time high and then get into price discovery mode, way up into the stratosphere, wherever it takes us. Okay. We can't get there until we break this, new all-time high, but we can't even go after that until we validate an RS flip up here. Hasn't happened, right? And we knew it wasn't going to happen because we had seen all of these prior wicks come below. It's like that was a sign of weakness. It broke down. Wick below, wick below, wick below. Sign of weakness. It broke down. Try it again. Wick below, break down. All right. So same thing happening here, right? We had this lower low at 59, just above 59K. It got annihilated last week on this dip ahead of the Fed Chair Powell speech on the monthly close. And again, that was speculative, unbelievable that the market, dumped that much on just pure speculation hours before the speech, but nonetheless is what it is. And now look where we sit on the daily time frame, and we'll look at it on the weekly. Okay, we just showed you the weekly where the 21-week moving average is really a key level here of support. We didn't quite make it all the way down there, by the way, right? So where does it sit right now? At about 56K. And up above overhead, we have the 50-day moving average. All right. The fact that these two moving averages are crossed, the green is the 21, the red is the 50, the blue is the 100, the purple is the 200. The fact that these are still wound up means there's room for things to improve, right? We can unwind this if price can move above this 100-day moving average, this 50-day moving average rather, and start making its way back towards this 2021 top. All right. We talked about wicks. Wicks are signs of weakness, right? We lost this one. We had wicks. We had wicks. We had wicks. We broke down, and now we have wicks in this 100-day moving average. So we've had a couple of candles. We're now on our third potential candle developing above this, which is good, but we don't have any above the 21-day moving average, which is not good. So, and it's not going to happen today at this point. So we have to wait till tomorrow to see if this holds here today and if we can print full candles above this 21 moving average. The resistance overhead, look at that, 66K. And this all correlates with what we're seeing here on fire charts. So take it back to the weekly time frame. Gosh, my internet connection sucks today. Sorry, guys. By the way, if you got comments or questions, go ahead and throw them in. I can see them coming in on the chat here, and I'm happy to respond if you're not understanding what you're looking at here. But so you can see here. Let's even go into the daily. You can see that. Am I getting any load here? What's going on here? That's not good. Didn't mean to do that. Looks like it's thinking, but it ain't moving. I think I'm having an internet connection issue here. I'll give that a minute and I'll go back to it, guys. But you can see, at the moment, actually, that we do have strong support down here in this 55, 56 level, and we have strong resistance here. Oh, now it wants to load. Sorry, guys, my internet connection is garbage today. Probably should have done a reset. Hopefully the guy working outside on my sprinklers didn't just cut my internet cable. In any case, you get the idea here, right? I may have to cut this short here because I think I'm losing out. But let me give it another second and see if it comes back in. It has not. Let me try going over to Fire Charts 1 and see if that's going to give me what I need to get. Okay, we could do this. We're good. By the way, two versions of fire charts. This is version 1.0 and version 2.0. They're a little bit different, especially in how they update and the order book history. Fire charts 1 just gives us 24 hours of history. Fire charts 2 gives us 3 years of order book history. So you can see here where we're sitting right now. We have the strong resistance overhead in this 64 and change level, just below 65K, and a little more stacked above that, and then a lot more stacked at 66K. This is all moving very, very rapidly. It's changing. And then down here, around this 61,750 up to about 62 and change, we have another block of about 21.5 million bucks that are at the moment trying to serve as support and push this up. Now, maybe, just maybe, if we're looking at the dynamics of the game, look at this. Maybe this block came up here, dropped down here. You can see the tip to tail action, right? It came down into this range here, and they're trying to suppress price. And maybe just to get this bid filled. I don't know. We'll have to wait and see how that plays out. But nonetheless, liquidity has been on the move. It is a big part of what is really controlling where price moves at this point. So yes, we can look at the technicals and we can speculate on whether or not things will hold. But at the end of the day, the liquidity tells us what's going to happen or not. Hope that gives you some insight and some things to think about as we move forward. I do think that there's really, you know what? One more thing I can share with you guys, actually, while I have you. Of course, we just had a weekly close, so we should check to see if we have any new signals. And as you can see, we do have a new signal here from trend precognition on the weekly time frame. So signals are tentative until the candle close, but good to see that we have both the A2 plus algo, that's the arrow, and the A1 algo, which is the dot here, both confluent showing us long signals, and this A1 slope line here. This is showing us the momentum, and that looks to be a pretty good trajectory here in terms of the strength of this move right here. So you may be aware, if you've followed for a little bit, that we do also have a down signal, a short signal on the monthly. Okay, so I wouldn't be concerned about seeing a short signal on the monthly and an up signal on the weekly, right? Consider the weekly as an intra-monthly signal, if you will, right? Both can happen, both can be valid. All this means is that it doesn't anticipate price to go higher than this, meaning not likely to make a new all-time high this month, and not likely to go lower than this this week. So that means pinned somewhere between here and here. Okay. And so, or actually here. So that would possibly suggest that we could see some just increased or extended period of consolidation in this range before we really get that next big move. Key levels again that I'm watching, this 69K level. I really want to see an RS flip validated here. And I'm really watching this, because if we lose this, yes, we have this 50 to 52K range of consolidation that is likely the next landing zone. But we weren't there very long. All right. So if we lose this, it could be a bigger fall down to this range. So, or potentially even beyond, depending on how things develop between now and then. Hey, Edgar, let's see. Got a question here. So if we hold 63K plus or minus through the week, we're going higher. If we break 63, then 55. 63 isn't the one I'm worried about. 63 is kind of an intra. You know, there's some jockeying for position going on right now. This is really the key level of concern. Obviously, wicking back into this range, into this 59 to 60, 58 to 60K range would be a concern. This is where our local low is here at what is that, 56.5, and 56.5 didn't really do it for me in terms of a technical level, right? Wanted to see it go lower into that 55 range where we were at the time at the 21-week moving average. So the 21-week moving average is really the critical zone I'm the most concerned about. 63, yeah, if we lose it, then chances are we're going to go back towards 60 or 61. Actually, 61.5, I think, is the level that we were really looking at over the weekend. Let me go into this a little bit. Yeah, so you can see we have this blue 100-day moving average right here at 60,500. And so, yeah, 63 is, holding up here is solid, but I don't have a lot of confidence in this because we don't really have a strong, you can see this is not a very strong candle at the moment. So I wouldn't panic if we lose 63, unless, of course, you're over leveraged and about to get pummeled. But yeah, the 21-week moving average is the one I'm most concerned of. If you wanted to go level by level, this 60,500 would be strong. 61,500 also, we had some action around that level, but I think 60, just at a glance here, what it looks like to me is I like the confluence here between this candle, this moving average, all the way across. We've had some intersection, around this level, even down over here as well too. So 60,500 would likely open the door to more. And the real area of critical concern to me is this 21-week moving average. Hope that answers your question. If not, feel free to post them here on YouTube or in Twitter. I'm engaging with you guys all day, every day. So I appreciate the support you guys are showing me. If you like the content, you're getting anything out of it, then please smash all the buttons and help me grow the channel. Share a comment. I love all the comments, and I engage with each and every one of them. Thanks, Edgar. I appreciate the response and the feedback and the follow. So anybody else, if there's not any more questions, I'm going to go ahead and wrap this one for the day, and we'll just keep in tune to what's going on, guys. If I see anything major developing, I'll do my best to break in and give you guys another bit break update. In the meantime, I think we're going to have a pretty interesting week here, guys. So, as always, manage that risk so you can stay in a game for the long haul and make it a great day.